Hi everyone. Today we're going to cover the investment allocation tool. The purpose of that investment allocation tool is for you to have a certain amount of money and to allocate it based on your risk strategy. I'm going to look into a little bit what that means. So first of all, we go to the click me first and the question that the worksheet answers. I have a fixed amount and I want to diversify it based on my percentage of income. Awesome. What we need to know, tips that will help you out, and of course, some qualifications regarding terminology. Okay, so let's look at the example sheet. So first of all, we're going to start with this. Remember, anything that is orange and dotted, that's where we input our data. The rest has some kind of formula in it usually. So let's say we're very rich and we have 100,000 euros. Okay, and we want to separate it into four asset classes. I have chosen indexes, stocks, mutual funds, and crypto. So let's say I'm more of a risk investor. I would say I want 10% in indexes. I want 50% in stocks, maybe another 20% in crypto, and what would we have left? Another 20% in mutual funds. So that's kind of risky. All right, so in each asset class, I have allocated these amounts. Okay, now here are the four asset classes I have listed. You can change them to whatever works for you best. Now, let's say on our indexes, let's say we have S&P 500 and we have Nasdaq, for example. Yeah. Now the second allocation here, the question is from the money we have allocated, the 10 grand, how do we want to split it between those two indexes in this case? So I think that technology is moving great and it's promising, so I would put 60% of my money here and I would put 40% here. It's important to have the full 100% so the calculation can be adequate. So here is the end of year amount. So let's say I've invested 4,000 at the beginning of the year, and at the end of the year, if you don't have those numbers, that's fine. I have made 4,500 or 13%. It's pretty doable. Now the Nasdaq, it's a little bit more aggressive, so I have made 6,900, which is 15%. And now you can see that first of all, you have the allocation of your funds here. And over here, you start seeing where you get your return from based on the allocation and returns. So here on the indexes, we have only, if I zoom it a little bit, that's better. We have invested 10% of our money, but we have acquired 14% of our revenue, which is awesome. Okay, we do the same with stocks. Absolutely the same logic. So let's say, who do we like? We like Nvidia and we like IBM and we like Apple. Okay. So what is the allocation here? And here you can have 10 stocks, as many as you need. So the allocation, 35%, 35%, and we have what? What is that left? 30% for Apple. Okay. So at the end of the year, here we have lost some money on Nvidia because it's very overpriced. So right now our current valuation of the stocks we own is 16,000. IBM didn't do very well and we lost a little bit, but still lost. Now Apple came up with the iPhone 999 and we make 2 grand out of them. Awesome. So here, the distribution, you can see that we've actually lost money. And even though we allocated 50% of our money, so that's 50,000 euros, we haven't made anything. I mean, anything. So let's just change the numbers a little bit so it's a little bit more visible. So let's do 16. Okay, so here we have managed to lose 2%. Isn't that convenient? All right. So we do the same with the mutual funds. Let's call it fund one, fund two, and so on. So allocation, let's see, 40%, 60%. Here we have 8,500 return. Here we have 12,300, so nothing really substantial on that. Okay. Um, right. And we can do the same for crypto. Let's say BTC, Ethereum, and so on. So here on the crypto, we have allocated, what is it? 20 grand. Okay. So we're gonna say we're gonna do 10 grand or 50% here, and we're gonna do another 50% here. Or we can believe in Ethereum more. So 60, or we can do 65, 35. Okay. And at the end of the year, man, this is 12, this is 15. Great, amazing. Well, that's kind of a jump, but yeah, still very possible. So when we look at the revenue allocation here, it's very easy to see that where we're losing money, where we're making stable money, where we're losing money, and that mutual funds are pretty great and safe, but we're not really doing anything. We're hardly beating inflation here, and that crypto kind of gives everybody a run for their money. Okay, so this is the purpose of this table. Thank you and be healthy.